Welcome back. You're watching Business Morning on Channels Television. Join the conversation online. You can tweet at BizMorning, or you can tweet at Channels Television, or send us an email to businessmorning@channelstv.com. Let's talk about how the oil and gas stocks finished off yesterday, which was the second trading day for the week. Of course, investors continued to be lackluster towards most of the large cap stocks listed on that particular index. Let's take a look at that list, starting from corn oil, of course. Corn oil continued to look very lackluster at the end of trade yesterday. It's still at 35 naira 49 kobo, and investors traded about 6,510 of that particular equity. So Forte Oil yesterday held was admitted to the FMDQ OTC Securities Exchange. That's its 9 billion naira Series 117.50 corporate bond was listed on the FMDQ OTC Securities Exchange and also on the Nigerian Stock Exchange. And the management also sounded the closing gong. But yesterday, looking at how that equity traded, it lost about 5.41%. It was one of the contributors to the loss of the daily index, which came in at minus 1.47%. So Forte Oil is at 53 naira 20 kobo, and about 821,000, I beg your pardon, 846 units were traded by investors. Mobil was also unchanged at 275 naira 99 kobo, but about 34,060 units were traded. MRS, no movement at all, no trade at all for that particular equity. We've noticed that investors have been neither here nor there for that stock. But taking a look at the next page, Oando added 2.11% to close at 4 naira 84 kobo. Seplat dropped about 2.63% to finish at 370 naira 1 kobo, and Total is at 273 naira 1 kobo. So I already talked about it, but let's just take a look at how that particular list is looking like. Daily index is at minus 1.47%. Yesterday it is at minus 9.2%, and dividend yield at 2.2%. Of course, as more oil and gas companies turn in their results for the 2016 full year, we'll get to see that likely change. That's the dividend yield, which is currently at 2.2% for oil and gas stocks. But we're still talking about developments in the oil and gas industry, but let's put it in context now and taking a look at the new forex policies as released by the Central Bank of Nigeria. Quite a number of issues that were actually raised. So now for personal travels and business travels, as well as school fees and medical fees, you can actually access this from your banks, and banks have actually also been given a mandate to open retail outlets at 5 of the major airports. And also another good thing is the fact that the transaction for forwards futures has been reduced from 6 months to about 8 months. And so yesterday, the Central Bank of Nigeria actually held a did a forwards futures auction wherein about $500 million was offered, and only about 370 million was taken off by some of 23 banks. So we're talking about how this is actually going to be to impact on Nigeria's oil and gas industry. Let's talk to Dolapo Oni, who is the head of energy research at EcoBank. Dolapo, good morning to you, and thank you for joining me.
Good morning, Harriet, and thanks for having me.
So this is the first time we're having conversations with regards to this new FX policies, although back and forth on social media, particularly Twitter, has been talking about this. It's been a long time coming for you. What do you make of it?
Well, I think it's a step in the right direction, and I think I applaud the CBN's decision to do this. I hope that they continue in this light. And I mean, like you see, most of the headlines that have come out with this particular development is that it's a move towards further devaluation in the naira, or a proper float, of the naira. And I think if they continue in that direction, then we might make a significant headway in relieving the stress on the economy and attracting investors back into the country.
But for you, Dolapo, is this exciting news for folks in the oil and gas industry?
On two fronts, yes. I mean, on one side, the fact that the FX forwards are now shortened means that people have more access to even though they are naira settled, but I mean, the hedges are there to ensure that you can actually stay in the market longer in terms of FX positions. So I think the oil and gas companies would like to take advantage of that. For those that have dollar receipts that they are not getting at the moment, that are having to collect naira, they can hedge those dollar receipts with the forwards, and within a shorter period of time, you get your settlement. But more importantly, I think what we'll see, which for me is more positive, is that there will be more dollars at the interbank markets. And we're starting to see that, even though at the moment it's still driven largely by CBN, if we have more dollars at the interbank market, then more companies will get access to dollars. And I expect that the oil and gas companies would also benefit from that. I'm particularly interested in the gas companies. The gas companies have had to be selling their gas, most of which is meant to be sold in dollars, but they've had to collect naira for a while, which is part of why we're having the problems we have in the gas to power segment. So they've had to be collecting naira, and the naira is benchmarked to the official exchange rate, but they are not able to access dollars at the official exchange rate. So if there's more dollars at the official market and they are able to access, they probably could get some priority, then it eases the situation in the gas market a little bit, which I think is an improvement.
So that is a remarkable improvement. But then taking a look at the fact that not all of these companies might be able to access these dollars at the official window, which is currently selling at 305 to 25, 305.25, but might be able to get from their banks, because banks now have the CBN's blessings, if you like to put it that way, to sell to off-takers. So they might be able to access it at 20% more than what they can get at the interbank over the counter.
Do you think? I mean, it's still better, Harry.
Okay.
I mean, it's like we say in Nigeria, in the colloquial terms, half loaf is better than nothing, So I think even at 20% over the interbank rate, it's still better than buying it at the